Hi everyone. In this video, I'm just explaining what is liquidity. Okay, most of the forex trader, when you are trading in the platform, if you are not finding the liquidity zone, then your trade may get failed. Okay, so that is what that much important this liquidity concept will have. So in this video, I will explain what is liquidity zone, and I will explain in the chart too how to find the liquidity and what are the types of liquidity and how it will respect and what are the confirmation we can take. Those things I will explain here. So first, what is forex liquidity? So liquidity means, that word liquidity is like a money, right? How much number of volumes of the traders they are trading in the platform. Okay, so most of the liquidity pairs you can see, the currency pairs are Euro USD, USD JPY, and the GBP USD. These dollars found all the have much liquidity in the market. So that's why I preferably used Euro USD and GBP USD normally, because that gives us a good winning ratio in the market. Okay, so how we can find the liquidity in the forex? Okay, so most of the normal traders, they will use an indicators to use uh, finding the trading of the level of liquidity. I suggest don't go for indicators. Better you can try where is a, if you are using a support and resistance level, then that concept you can use. Or if you are using a supply and demand zone, that concept you can use. That are the most perfect level we can find where the liquidity is available and how to grab that liquidity. Okay, so for important thing, the thing is candlestick and the liquidity area will never lie. You have to wait the candle reaction as well as the liquidity area. That is two highly important of finding the liquidity one. Okay, so what are the steps you have to find? The first one is you have to identify the swing points. Okay, so swing point you should identify in higher time frame. Like you can take a daily or a weekly chart to identify the swing points. Then you have to draw the zones. Okay, for that liquidity area, you have to draw the zone and you have to wait the candle reaction. Okay, so what the reaction you are looking for? I strongly believes in looking the reaction of the candle to be filled in the support and demand zone areas. Okay. You can check whether the candle may be a pin bar and engulfing. That is the main confirmation you can take. And the fourth level, you have to consider the overall trend. Okay, so always you should check which trend you are, either in an up or a down. Okay, so if it's a downtrend, you go for a sell trade, and if it's an uptrend, you go for a buy trade. Okay, so patient, you have to wait the liquidity zone, okay, and confirm that. And what other confirmation you can make? So the area which you draw at left side, you just check it out whether there is any imbalance level is there. That is a main preferable choice of testing the level. Okay, and below that you check the order block is there. Then if there is this kind of reaction is there, then you can go for this. Okay, let me show you how we can find this. Okay, how we can find this in the market. So you consider here, here is a zone I just drawing. If you are a resistant level trader, okay, resistant level, I just made this as a resistant level. If you are a resistant level trader, you just you wait for this zone to react, right? And you will trade. So normally where you will put the stop loss, just above this, right? Just above this level, you will mark the stop loss. Okay, you just put the stop loss here, and you might be enter over here or here this area and make a place a put option, right? So that is wrong. Okay, why it is absolutely wrong, I will tell you. Okay, this liquidity area, when you choose, see, my assumption, you can choose a very big area as a resistance level for the liquidity area. That might be an one important criteria I normally choose. Okay, and what other you can do is, for an example, okay, if you are going for a liquidity level trading, then I will tell you where the liquidity is resides on. Okay, the liquidity area will be resides on just above the stop loss area which you are marked. Okay, for an example, here just above the stop loss, which liquidity is, there are two liquidity normally, right? One is buy side liquidity, okay, another one is sell side liquidity. Okay, buy side liquidity. This area, the market will gives you to buy or sell. You have to go for a sell option in this buy side. Okay, and where is the sell side liquidity is reside? So sell side liquidity is reside down. Okay, reside down this side in the support level. Okay, liquidity. This sell side liquidity and the buy side liquidity. Okay, here I just drawn for you. So where the area which you mark for the buy side and sell side liquidity is just above the stop loss area. Okay, just above the stop loss area. Here you will mark there is a buy side liquidity area. So how I mark this as a buy side liquidity area? See what you have to take for the buy side. So when the market is coming this area, the market buy side area, it comes and it will fall. Okay, in buy side liquidity area, you have to sell it. Okay, you have to sell it. And in the sell side liquidity area, when the market is reacting here, you just wait this area and you have to make a call in this. Okay, so in the sell side liquidity area, you are going to make a call. So how we are going to make a call in this side? Okay, I just explain you here. In this, a thing is, here, let us see an example. So when you are seeing there is a buy side liquidity, you find out, you just wait out the level. Okay, you just wait out this resistance level and just check where this side, left side, okay, the imbalances reside. You just find the imbalance area. Okay, imbalance area, you check it. Then above the imbalance area, you just check it whether there is any order block is there or not. This first one is imbalance you check, and the second one you check the order block. Then what happened to this marketers? Okay, here when the market is coming to this direction, in this opposite direction, it just rise it from this level. Okay, and it just go to that imbalance area, touching that imbalance area. May it touch in the order block also. Okay, sometimes it will not touch in the order block, but you can see there is a reaction of the candle. Okay, if there is a reaction is engulfing or something is there, if pin bar is there, then you can trade. So you just start selling from that. That's a very good entry. Where you place your stop loss? You just place your stop loss at the above of this. This one, this area you will place. Okay, here your stop losses and will make an entry at the next candle. Okay, so you will get more quick value of the ratio in terms of profit. This will highly, it will works. You can go and check it. It will everywhere the market, either you are a forex trader or a any kind of intraday trader also, this pattern will surely work. Okay, so we'll check, we'll give you another example in the chart. And before that, I will explain what are the other concepts you have to know it. Okay, so the other thing is you have to know what are the types of liquidity available in the market. Okay, in this market, we have three types. Okay, one is equal high and low. So what is equal high and low? So when you have a market, have a high, then again same high. Okay, the market will have a double top. The same high it will place. Okay, in the same area, what it goes is, it will break this area and it grab the liquidity. It's a buy side liquidity. It will grab it and start falling it. Okay, and we have a double bottom. So take a double bottom. So have a same low in the market. So when you see the same low, you just place a resistance in this. Okay, market will grab this lower and it will goes make a high. Okay, so you have to check this is a sell side liquidity in this. Okay, then what is trend line? So most of the trend line trader, you see there is a liquidity, you find there is a wick in the market. Okay, so when you see there is a downtrend, the market is facing a downtrend, you see there is a liquidity in this area. Most of this case, it will goes up and it will makes the high and it will grab the liquidity area and it will start fall. Okay, so this is a buy side liquidity. It will grab it and it will fall. Okay, so then other side is buy side and the sell side liquidity. Like the market will come. Okay, you can see this, like you have only one resistance at the zone. So this resistance, if you are waiting for that, the market will grab the above liquidity and it will start fall. Okay, so this is a buy side liquidity. Like it's You're just waiting for the here imbalance on the order block level. If it is there, then this value, it will work here. It will work perfectly here. And what is sell side liquidity? Sell side liquidity is the same. When you have a support, you just wait for the support level to react. But market, unfortunately, it will fall down and it takes this area, liquidity grab, and it will goes up. So this is sell side liquidity. So in this video, I'm just explaining only this buy side liquidity and the sell side liquidity in detail. We will see as steps. Before that, okay, what is buy side liquidity and sell side liquidity? Will explain you here. So in this, you see, there might be any high. Okay, you were waiting for that high as a zone. Okay, but the market will not react at that point. What happened? It will goes up and it will grab the imbalance over here. Okay, and grab the order block level, and it will start falling. Okay, that type of liquidity is called as buy side liquidity. Okay, buy side liquidity always plays at the top and sell side liquidity always plays at the bottom. Okay, so this is sell side liquidity and this is buy side liquidity. So buy side liquidity, you go for put option. Okay, in this buy side liquidity will go for put option, and sell side liquidity it will go for call option. Clear? So this what I think the most of the traders, when they find the support and resistance, they're placing a stop loss above and they are taking a trade. That is a very big mistake in the trading platform. Okay, you just wait where the liquidity it is grabbing or not. You find if the liquidity is grabbing, then you can go for sell, most preferably sell option in this. Okay, we'll see in the chart, show you in the chart here. See here, this chart, you see there is a resistance. Okay, this is a resistance level. The market goes up and it grabs here, the imbalance might be there. Okay, it grabs this imbalance and order block level. You see there is an engulfing pattern you will get. Most of the time engulfing pattern you will get, or you can get any pin bar. So that will makes you to fall down. Okay, so this is a buy side liquidity. Okay, so you are waiting for the resistance level. Don't take immediately on the resistance level. Wait to grab that in the liquidity area. Then you just go for the sell side or buy side. Okay, so we will see the confirmation of this trading in the liquidity is one is volume. Okay, what the volume is telling. So you can see there is a sudden increase and the decrease in the volume is giving you like sudden increase, decrease, then again high increase, decrease, then again increase, decrease. So these kind of volumes when you are seeing in the chart, that will gives you the liquidity is highly working. Okay, then what is the other one? The other one you can see, you take, if you are a Fibonacci level trader, you just trade in a premium or discount. Okay, if you are in a downtrend, trade in a premium level. Okay, and if you are in a uptrend, trade in a discount level. Then that you know that already what is premium and what is discount, right? So you know that if I placing a high and low here, right? This is a Fibonacci level I'm placing. I will get a 50% level over here in the mid, right? In the 50% above is a premium. It's expensive level. So in this expensive level, what we will do? We will do the sell option. Okay. And in the discount level, what we will do? We will go for a buy option. Right? And what this middle level is telling? The middle one is called as equilibrium. Okay, that is fair value. Okay, so when you going to place a trade, you just sell in the premium. Don't buy in the premium. That is a great mistake. Most of the beginner trader are doing. Those mistakes, don't do it. Okay, sell the trade in the premium level, buy the trade in the discount level. Then let me show you how to spot the liquidity in the trading. See how we can spot us if you are a SMC trader, high volume if you are looking for, then you just wait for these kind of confirmation. Like either you can take a support or resistance level, okay, or supply or demand zone you can check, or you can take the consolidation level or accumulation level, or you can take either any double bottom or double top pattern you have. Then trend line chart you can take, and also if you are intraday trader, you can take the previous day high and low you can take. And also you can take section high and low on the beginning of the day. Okay, these are the most liquidity spot level. We can find it and you can trade. Okay, so here, let me give a clear description about what is a liquidity hunt. Okay, so liquidity hunting, or you can take it as a stop hunting. So when the price will move just above your resistance level. So for an example, this is a resistance level if you take. Okay, this is a liquidity level you are taking. You are waiting the market to react in this level, but you won't get. Why? Because you have an imbalance area here. Okay, you have an imbalance area here. That imbalance area, you will wait it and wait for an order block level to grab it. Then you can make a put option from, you just see what the thing. You will get a pin bar like this, or it will get an engulfing like this. Then you can sell in this, make a stop loss over in this, and made an entry in this. You can just get a good profit in this. Okay, so this the thing we will call as liquidity hunting. Okay, so how we can do it? Let me show you a simple example. You see this one, a market is giving a down. Okay, so this is a downtrend. In the downtrend, when I find there is an engulfing, okay, most trader, what they will do is this inverted hammer. So they will check, they will place a stop loss here and they're just making an entry here. Okay, make an entry here and they will try to trade. That is a mistake. Because where is the support resides on? Right? Where is the resistance resides on? Here is no resistance at all. Right? Here resistance is here. But as it is, when you see any type of pattern, price action pattern, if you are just trading, that will not give you a good result. So what I'm telling is, you just wait after this. Okay. Suppose if the traders are taking the trade here, what is the result they will get? I will show you here. So this will give you a 2 or 3, okay, candles down. After that, okay, you are trying, this trade will go down, but it will not go down. What happened? It will come again back to this retesting level. It will grab your stop loss. Your stop loss is hitted here, right? This stop loss will be hitted. So that will be a loss for you. But what I will do is, I just wait when these kind of patterns appears. I will wait here. Where is a imbalances? See here, I have an imbalance, right? This is an imbalance area, and you see this is our order block level. Okay, the last green candle is an order block level. Market will come to this level, get reacted, then it will go fall, start falling. Then only you have to enter the trade. As it is, if you are trading, then you will make a loss in this. Okay, this means that all the stop losses of the buy order will be taken. Okay, so we have a buy side liquidity at this level. So buy side liquidity at this level. Okay, this buy side liquidity will be grabbed. Okay, this level we will enter. So we see there is a pin bar and kind of engulfing. Then you just make a trade entry here. Okay, this gives you a better result. Will never fail. Okay, so once the thing is, you just see how much large volumes are comes and collected that level. Okay, so you can say that is an inducement which is in the wrong direction on the wrong time. Okay, so create a panic buying moving against the entry. So it will hit the stop loss and it will make a fail when you enter here. But don't do that mistake. Okay, so you just wait and you see these kind of thing. Particularly, it will comes in kind of ranging or consolidation or any kind of support zone or a demand or zones you will get. Okay, so how we can make an entry in this? So we'll give a chart explanation in this. See in this, you see Euro USD pair I have taken. If I have taken, this is my liquidity level. Okay, this is my liquidity level if I am taking. See, this is my liquidity area. Okay, now what happened when I wait to this level, the candle is breakout. Some breakout trader will trust in this breakout level and taking a buy trade here. That is also a mistake. Don't buy in this level. So market is just going to check. Okay, so what I suggest is, you just check where your imbalances. See here the imbalances reside, right? And just above that is an order block level. Okay, that is an imbalance area. You see, this is our order block level we have. The entire area is order block. Okay, this order block market will react it. Okay, market will come to that order block level and it will grab that level. You see, the grabbing that level, and it will market will fall. So this what the liquidity, okay, liquidity area will suggest you. Okay, so this how we will trade, and I will show you one more example in the sell side liquidity, that is about the buy side liquidity. And sell side liquidity, I will take GBP USD pair. Okay, so GBP USD, see this area already I had drawn. I just show you this. This is my area. Okay, when you see, this is your level. Okay, this is your area. If you mean that this is our resistant. Okay, you are waiting for true trade in this resistant level. But market, what happened? It above that, it will give the reaction. So when you see the above reaction, the most of the trader will taking a call. That is also mistake. Don't do that mistake. Because already it is retraced 2 times. Can you see? It is induced 2 times. The order block, you have to find where the imbalance is. See here, just below that, you have an imbalance here, right? In this imbalance area. And you see where is our order block is. So this is our order block level resides. So you just wait for that order block level. Okay, wait for that order block level. This order block level, when you see, this is an order block level. You just draw that order block level, entire level you draw. You see there is a candle reaction. So we find out this is our inducement level, right? This is our inducement. Like you are saying, it is a liquidity area. Okay, this liquidity area, we just mark this liquidity, and we have an order block here. This is our order block level. Okay, this level, when market comes, okay, this level, when market comes, you just place a trade. So how we will place a trade? So you just, here, you just place a long position. Okay, so we place a stop loss at this level. Okay, when you looking for the stop loss, you just place this level. The stop loss must be below this level. Okay, and your profit must be above this level of range. Like 3 pips value you can take. Okay, it is more winning ratio you will get. So as you don't place a trade immediately here, just wait and you will take a trade. Your profit will be at here. Yeah, I'm telling to here, will get a good profit. Okay, hope this liquidity video is useful for you. So just go and check. You can find everywhere. So when you check the level, you will come to know where the liquidity is. Suppose if you are finding this, you can see the market reaction. Okay, and if you are finding this is an order block there, that is balanced candle, you will not get. Okay, below that imbalance area only you have to check and enter. That will gives you a better winning ratio. Okay, keep watching. Thank you.